Hello everyone, welcome back to my channel Finance Eco India. It's September 19, 2025 and the market has taken a bit of a tumble. Sensex dropped by 400 points, Nifty slipped below 25,350. What caused this fall? Was it just profit booking? Or are there bigger concerns? Let's unpack what's happening in the market right now. Which stocks are getting hit, the global factors in play, and what you should watch heading into the next trading session. Blue chips like TCS, ICICI Bank, and HCL Tech were among the largest draggers. Heavy selling pressure hit sectors such as IT, banking, and FMCG. One of the primary triggers was profit booking. After rally over recent days, many investors chose to lock in gains, especially in large cap stocks. Another factor was weak global clues. Investors abroad are cautious due to geopolitical and policy risks. Also impacting sentiment was the US decision to withdraw sanction waiver for the Chabahar port by end September. That has been providing relief for some cross-border trade news. The removal adds to geopolitical risk, which tends to weigh on markets. This dampens local sentiment too. Risk perception rose. India's VIX climbed 3 to 4%, signaling increased fear. Meanwhile, the rupee slipped, dragged down by dollar strength and a weak equity market. From a technical perspective, resistance lies in the 25,400 to 25,600 zone. On the flip side, key support is around 25,280 to 25,350. If Nifty breaks below these, more downside becomes likely. So what investors should do? What should you keep an eye on now? Global macro data, especially US inflation or Fed clues, and how China and Asia are performing. The rupee and performance of foreign institutions, FII flows matter heavily for market direction. Sectoral strength. Which sector bounce back? Will IT continue to lag? How about banking or FMCG as defensive players? Key support levels. If Nifty slide post 25,280, market may test lower zones. On the upside, a clean break above resistance near 25,450 to 25,600 could bring back optimism. So to wrap up, today's decline in market is mostly about profit booking, soft global cues, increasing volatility, and geopolitics. Nothing unusually scary, but enough reason for traders and investors to stay alert. If you are an investor, consider defensive sectors or reduce exposure in overbought names. If you are a trader, watch those support resistance level and manage risk tightly. If you found this helpful, hit the like button, share with friends, and subscribe for more market insight videos. See you again soon. Stay safe, stay aware. Thank you and Jai Hind.